This report aims to show the feasibility and probable operations of Frame.Inc. The startup deals with the production of customized oak frames of various sizes and its operations planned for the first year. The project shows promise due to its ability to compete on the market and a slim operation and setup costs.
As the company is going to produce picture frames, it will need several different raw materials. We will use wooden planks, glass sheets, and nickel pieces. Total sum of the materials equals $70. The company is planning to sell frames at the price of $150.
The company is going to use job order costing as the three processes are distinct and may be easily separated from one another, which will be useful for calculating overheads and optimizing the production process.
3 standard sizes have been reported to have highest success in the market with competitive price ranges as follows: Size A, $120 to $130, Size B, $130 to $140, Size C, $140 to $150. The prime cost for the units in all 3 categories fits well under the limits. However, as the frames are handmade, a major portion of the cost will be labor hours. As the labor rate was fixed by the assignment, it will be used, but in reality it is higher in this sector. At the moment the company has the option of renting only a small size factory for $3,000, which limits its production capacity, reflecting in the high overheads. The limiting factor analysis shows that, in fact, the smallest frame is the most profitable due to its highest contribution margin. As the expected sales for this product line do not exceed $500, the company will produce exactly this many frames of size A, leaving half of the available labor hours open for the second in profitability product at this price, size B. Thus, even though research shows the A circumflex most desirably product is size C, the company has no financial incentive to produce it at this scale, but might re-evaluate this decision after a possible expansion.
Where the administrative expenses include the manager's salaries that may not be paid out in the first months in order to increase the equity of the company. The selling expenses are relatively high due to the barriers of entering the market and establishing relationships with local galleries and art enthusiasts, as they include the cost for promotional materials and events. And indirect materials cover the cost of additional materials in the process, such as fuel for some of the handheld machines or paint.
Now that all the underlying processes and data have been established, the probable profitability of the company needs to be established with a pro forma income statement. Even with the seemingly inflated prices of the 2 smaller sizes of frames, that still fit inside the projected successful price range. The company assumes that it will be able to sell 500 size A and 433 size B frames, which is its maximum production. In that case it will be able to make the profits stated above. This scenario, however, is not very likely, as demand can never be precisely predicted. Even if the company falls short to meet its predicted sales, though it has a good margin of safety covered further down which will allow it to manage the first few challenging months after its establishment. In case the demand is lower, however, the significant gap between the cost of production and the sales price over $30 per unit will allow the company to utilize lower profit margins in order to increase the amount of frames sold and still receive profit. It will also be able to utilize discount prices and bundle selling so that the inventory turnover rate is higher.
If this were not a new company and size C frame was already being produced, it would have proved inefficient in the differential analysis and it could have been stopped from production. In this case, size A is more profitable than size B. Since bad products are making a profit, none is in fear of being discontinued. Should it so happen that one is, though, the company will incur the same value, as a loss of $9,000.
The predicted sales for the first month were set at 500 and a budget was drafted to suit that production level, but at the end of the month 560 units were sold, so the budget needed to be flexed. Further research proved that the product was seen as subprimed to its low cost, so it was sold at a higher price due to the higher quality wood and plexiglass employed in the production.
As the budgeted sales were lower than the actual, the budget did not manage to account for the higher costs. It has proved to be inefficient when it comes to predicting the actual costs, but the differences are nevertheless favorable as profits were not overestimated.
Factor of the internal rate of return equals investment required over annual net cash inflow equals 3.33. A useful economic life can represent an internal rate of return of about 25%. According to the EAR method, the investment project should be accepted as long as the internal rate of return, 25%, is more than the cost of capital, 4%.
Frame is a lucrative investment option. It shows great promise in the first year of its existence. The market is competitive, but still has room for new companies. The predicted production costs and sales prices are on par, or even better than those of the competition, considering the company had to increase the sales price of its primary product line to present itself as a high-quality brand, and managed to realize 30% increase in profits. Frame is a low-risk moderate reward venture, as can be seen from its sufficient margin of safety and operating leverage ratio on its main product. The company succeeded in finding and producing only the most profitable products for its size. The initial investment is negligible, and the highly labor-dependent product is in fact preferable in the niche market. Local production and connection to suppliers and partners are a big comparative advantage, as the clients are looking for high-quality product with a story and personal significance. All in all, the company is a shining example of social entrepreneurship. It provides highly sustainable business with low carbon footprint and an option for releasing a complete new line of recycled products. Its effect on the declining demand for artistic talent in the workplace will provide a great example for other companies as well. But its best feature by far is that it can be set up in rural areas, and thus decrease the unemployment rates and make use of the aging population residing there.